Hello, Transformers out there. Welcome to the Transform You Live show. Today, we're going to be talking with Christopher Godwin. He is the guy who's going to show you how you can lower your interest rates if you're looking to be in the Australian housing market. There's interest rates that skyrocket, not only in Australia, but across the world. We're seeing a huge epidemic happening. And and Christopher, he's the guy to talk to today. He's an expert. He's right here with us. So don't not go anywhere. We'll be right back with you. Hey, welcome back, Transformers. So, as promised, we got Chris here who's ready to talk to us. He's going to introduce himself in full. I gave you guys the casual introduction, and today I'm recording from the car. Me and Chris joked on the other side about like how this might be the carpool podcast, but no, this is the Transform You Live show podcast. What's going on, Chris?
Yeah, not much, Marcus. Thanks for having me on. Yeah, like you said, I'm from Australia. I'm in Sydney, and I'm a mortgage broker down here. Been doing it now for about 8 years, and basically my job down here in Australia is to help people when they're looking to buy property or refinance. Instead of going to a lender, they'll come to me and say, "Here's what I want to do. Here's my situation." And I go away and look at the different lender policies and figure out which lenders are going to consider their application, and then take those lenders and pit them against each other and negotiate and figure out which one is going to be most suitable for those customers. And it's super important right now, obviously, with interest rates going up. Here in Australia, we've had very low interest rates for a long time, and below 2%, at one stage. And we're now going up. We actually just had an interest rate rise just yesterday, 0.5%. And now it's starting to get more expensive, and it's getting, super important to, review your interest rate. Or if you're going to buy a property, it's even more important to, take that time to figure out which lender is going to not only accept your application, but also to offer you a competitive interest rate. I noticed in the US there, your home loan rates are sort of hitting now in the 5%. Over here we've got interest rates in the 2%, so still super low. But now with these latest rises, I think we're going to be sitting more in the 3%, and there's a lot more to come, apparently. But I don't know what you guys have been experiencing over there. How long have your rates been going up for?
Oh man, it's a total buyer's market over here right now. So lenders are taking advantage of that, and then with the inflation, the inflated
Yeah,
state that we are in right now is definitely happening. And I like that. You pointed out to us, a short comparison of like how we are right around 5%, but like I'm seeing as much as 7%.
wow,
So
wow.
so it's pretty crazy, and to hear 2%, but like inching up to 3%, that still sounds like even a little more fair. Like, oh, Australia doesn't sound so bad right now.
Yeah, I mean, it sounds good, but it's kind of scary because over the past few years, because we had these low interest rates, when the banks do an assessment of your situation, even if the interest rate was 2% that you're going for, they have a buffer that they use when they, assess your application. So
Right.
instead of using the interest rate that you're going for, they will use a much higher interest rate. And the
Mm-hmm.
minimum that I've seen them using here in Australia is around 5%, a tiny bit under for some lenders. Most of them up around, sort of 5.2, 5.3. So the scary thing is if our home loan interest rates do get up above the 5% rate, we're going to be in a position where a lot of people will be paying more than what the bank's assessment was at the time. So if their situation hasn't improved, then technically, something's going to have to give. Either they're going to have to reduce their expenditure below what maybe is their minimum standard, or they're going to have to sell their property, which is only going to compound the issue over here. I mean, I don't know how low your interest rates got to. Did they ever get that low?
Not since post well pre recession. I can remember pre recession. Where everybody was enjoying some great interest rates, and then for a short time after the recession, after 2008, things got a little bit lighten up. But now here we are right now where we are now. It's like we going back in reverse very quickly, and I'm wondering. I'm quite curious about in Australia. Uh, when we had our recession here, about 2008. What was going on then, and how does it compare to like what's happening now?
Well, look, Australia was pretty lucky in 2008. I think we escaped the worst of it compared to the rest of a lot of the world. We did have a short period of I guess a mini recession, and if you go back in time and look at what the interest rates were doing back then, I was looking at it yesterday, and the interest rate sort of went down. We were sort of I think we were at about 7% back then,
Yeah.
and they went sort of down, and then they went up a little bit, and then since probably like 2009, 2010, we haven't had any interest rate rises at all. I mean, we've
Mhm.
only decreases for the last, I think, 11 years, and it's only the past 2 months that interest rates have now started to come up, and
Right.
in 2 months they've gone up. Our national cash rate was at 0.1%, so it's
Mhm.
pretty much rock bottom. And in the last 2 months, it's gone up to 0.85%. So it's a huge jump, and they reckon it's going to continue. So it's scary. But property prices over here, like the median house price in Sydney has been like well over $1 million for ages
Wow.
now. Yeah, that's the
Oh my
median
God.
price. So you can imagine the amount of debt that's out there, and if interest rates do go up, people's repayments are going to absolutely skyrocket. So it's just super important that if you have a home loan, or that if you're going for a home loan over here right now, you really need to go through that process. Gone are the days of just going to your local bank and applying for a loan. And banks appreciate it when they get an application that is within their policy, and they're
Mhm.
happy to negotiate more when that happens.
Right.
Because if you go straight to a bank, they're going to do all the work, and if your application is not within their policy, you're wasting their time. So they're less likely to want to negotiate with you up front.
Yeah.
Whereas if you are offering them an application, like for example, if me as a professional comes to them and says, "Hey, I've got an application here. I've already assessed it. It's within your policy, but it's actually within other lenders' policies as well, and they're offering X, Y, Z." The lender's much more likely to give us a really competitive offer,
Mm.
because they think, well, this application is most likely going to be accepted by us, and we need the business, because the lenders are fighting for business over here. I mean, a lot of them are offering cashbacks and stuff. Like if they'll say, if you bring your home loan to us, we'll give you two, three, four, five, $6,000 cash just to bring your
Wow.
home loan over. I mean, they're fighting for business. So yeah,
Yeah.
I mean, it's you've got to go through the process.
So who does that, and this is I think this is right along that what you're talking about here, and I think this is a question that'll fit good with this is like, so is this like more on the benefit of those who's a second time and so on and so on buyer, or will the fact that like lenders are now kind of like opening the walls open because they're kind of desperate now to get someone to take on these loans, who is it more benefiting, do you think?
Look, people that already have a home loan, they're in a pretty strong position, because you know, realistically, they should be able to qualify for a new loan. Depending on what's happening with their circumstances. Obviously, as interest rates go up, less and less people are going to be able to qualify for a new loan. But definitely, if someone has an existing loan and they're looking maybe for a more competitive deal, it's going to benefit them the most, because they're most likely going to, or they're more likely to qualify for a cashback promotion.
Right.
And like I said, if their application is it appears to be within the lender's policy, they're probably also going to be in a strong position because they've got leverage, right? So they can say, hey, I can give you this business. It looks like it's going to be in your policy, but you gotta win it. You gotta offer me something good. And that's just super important right now. So I think it is benefiting them more. But as interest rates are going up, even before they started going up, everyone was talking about it, and property prices are now starting to go down. So
Mm.
that's going to benefit first home buyers, a huge amount, because for the last few years, it's been very tough for first home buyers to buy a property. You could imagine in Sydney, you just can't get anything for under $1 million. So you gotta save a huge deposit, or you gotta have a family member that is willing to guarantee your loan or something, because it's just out of control. But now with these changes, these interest rates going up, property prices coming down, I think over time, first home buyers are going to benefit.
Mhm.
But unfortunately, people who bought in the last few years, or couple of years at least, may find that their property values are going to come down, and it's no longer going to benefit them to be refinancing and stuff. They've got to move now, because when property prices come down, their loan, ratio is going to be higher because
Yeah.
it's come down. And lenders, the higher your ratio, the less lenders are going to look at your application, and the more expensive it becomes, because then you've got to pay extra insurances and all that sort of stuff. So it's going to be really interesting to see what happens over the next year or so with all of this.
Yeah, ladies and gentlemen, we were talking with Christopher Godwin. He's the man right now. He's definitely giving us an insight. Give us some industry insight here, and some observations of what's happening over in the market in Australia. So Chris, like to kind of change tracks a little bit, but we still kind of along the lines. Underwriting, when it comes to underwriting and getting these things approved, has any of that changed a little bit? Have they loosened up? Have they tightened up? Has like, you've seen anything crazy happening?
Look, definitely tightening up. So, in terms of, look, it really has it's tightening up, because as the interest rates go up, obviously that buffer I was talking about before, that pushes the assessment interest rate up. So it's usually around 3%. So if the interest rate that you're going for is 3%, then really what you need to be qualifying for is 6%, right? Depending on the lender. So as interest rates go up, it's going to become harder and harder to qualify for a loan. Every month that they push these rates up, the harder it's going to become. And also, over the past couple of years in Australia, they've introduced something called comprehensive credit reporting. And what that is they, the lenders, when you put an application in, and for me as a mortgage broker, one time I've taken you on as a client, you sign my privacy declaration, I can have a sneak peek at your credit file, and the lender does the same thing. And basically what they can see is not only every application that you've made for home loans, car loans, credit cards, even utilities like power bills, phone bills, all that sort of stuff. They can also see the repayment history for the last 2 years. So if you've had any late repayments over the past 2 years, that's going to show up in your credit file. It's going to reduce your credit score, and it's going to make it harder to qualify for loans. And again, that's why it's so important to have your application pre-screened by someone like me, like a mortgage broker, to look at that and make sure that whatever is showing up there is going to be acceptable to the lenders that we're considering. Because the last thing you want to do is apply to a lender, they see your credit file, and they decline your application. It's going to reduce your credit score, and now you're in the tough position of explaining to the next lender why that lender declined your home loan application. It creates suspicion. So that's making it harder as well, because maybe you had a month where you just forgot, and you didn't
Right.
make your payment on something, and now it's sitting on your credit file for 2 years. So yeah, I think the underwriting side of things is definitely becoming stricter, and it's only going to become more and more strict as time goes on. So yeah, if if you are looking to do something, you've really got to you've got time pressure. You got to probably get a move on now, because it's just going to get harder and harder as time goes on.
I think that's an important key point that you mentioned earlier on in what you were saying here about the fact that that lenders really don't like seeing that that you're applying everywhere and that you're getting turned down everywhere. It's like
Yeah,
it's like I guess like trying to get a date and you walk in a room and all the girls are are
yeah,
already talking about you. So
exactly.
I think that's really important. Now, is there any tips or any particular advice that you can like help people to navigate through avoiding that? Is there anything that in particular, besides the fact that you mentioned like pre-screening,
Yeah.
is real important sitting down with someone. But is there any like things people can do before they even get to the table with you, or maybe you sit down with people and say, hey, well, maybe you need to do this, and come back to me.
Yeah, look, I think the most important thing is setting up automatic payments on all of your all of your liabilities, all of your bills, making sure that everything's automated so you can't forget, because it's just so it can create so many problems later on if you do have any blemishes on your credit file. And I guess the only other tip is um, you know, make sure that you're not going and applying it at a lot of different lenders for example for credit cards. It's so easy in Australia. I assume it's the same in the US to go onto a bank website or whatever, and look at the credit cards and bang, apply now. You press that button, you put in your name, your driver's license number, press next, and next thing you know, it's on your credit file. Okay.
Right.
And every time you do that, it's just, pushing your credit score down. It's creating more questions. You go for a home loan and the lender's going to say, what happened with that credit card application? And then you're embarrassed. Oh, I got declined. It's just something that you need to be very mindful of before you click apply on any credit. Just really think about it. Do I need to be doing this? Is this the right move? Because otherwise it can come and bite you later on. Yeah,
Yeah, that is so true. And those inquiries are we call them inquiries over here, and they are so tough to get off, and a lot of them companies will not budge, and they say,
that's
yeah,
right.
that was the person that applied.
Exactly. And you know what? Your payment history is 2 years, but those inquiries over here, it's 5 years. So they stay on your file for 5 years. That one little click you do on the web stays on your credit file for 5 years. I mean, it's just ridiculous. But you just got to be mindful of it and be careful. And wherever possible, if you do have a mortgage broker, give them a call and say, hey, I'm about to apply for this credit card. What do you reckon? Is it going to affect an application if you've got something in mind that you want to do? And just get their feedback before you go and do it. It doesn't mean you shouldn't do it.
Right.
Just that you probably should make sure that before you do it, that it's not going to affect you too much negatively later on when you want to go and, for example, refinance your home loan or buy another property or buy your first property.
This really like gives me a different look at like how mortgage brokers are viewed, and I really appreciate you coming on and really like shedding light on like that you guys' job is much more than just pushing the application to the next next level.
Yeah.
You guys are definitely consultants, and you guys are definitely there to help people, and that's really important. And Chris, you definitely show a lot of expertise in what you do, and that's really important. I thank you so much for that. Yeah, there's one question that I like
Yep.
to ask before we fall towards like the end of this. I, in terms of like just we talked about the fact that like the housing price is
Mm.
just like just skyrocketing, and that's very much true here. what used to cost 50,000, is like a hundred and some thousand. Like
Yeah.
like you said, houses over there are $1 million and up.
Yeah.
Now, if you crossing your T's and you got the good credit, and but you know is having the proof of income, and how much does that factor in, and like and is there any other thing that can get you turned down when you're looking at, like, man, I would really like that $1 million home?
Yeah. Yeah. Definitely. So there's really three main criteria. So when you apply to a lender, there's more than three, but there's three main ones, right? So the first one is your character. So that's your credit file. That's your bank statements. So a lot of lenders and myself will go through your bank statements and check if there's late repayments and things like that. Just a general overview. What's your character like? Do you tend to repay your loans, or do you not really care and you just have late repayments everywhere? That's going to be an issue that can bring you unstuck.
Mm-hmm.
The second thing is what they call collateral, right? Or equity, or whatever you want to call it. And that's how much equity do you have, or how much collateral do you have? So, for example, if you're refinancing, if your loan is at 400,000, but your property's worth 500,000, you've probably got enough equity there, right? But if
Right.
your property's worth 500,000, your loan's 495 or over 500, then that's going to become an issue, right? So that's the second one. And same when you're buying a property. You want to buy a property for 500,000. Well, the lender wants to keep a bit of fat there. So you need to make sure that your savings is enough to keep that as low as possible, that loan to value ratio, right? So that's two things, right? So you got the character, you got the collateral, and then you got the capacity. And the capacity is the affordability, and that's the part where they look at all income, they look at all of your expenses, and then they see what's left. And then that's when they go, okay, how much could you afford to repay at not 3%, but at 6%? And then that's, effectively how they figure out your affordability. So there's three main things. So you want to go buy $1 million home. Not only do you need to have good character, but you need to have the collateral, or the savings, or the equity, and you need to have the capacity, which is the affordability to make those future repayments at a higher interest rate. They're the three main things that you need to cover off. And then there's some other little ones, but they're the ones that you need to really cover off when you're applying for a home loan application. And it's why it's so important to have a mortgage broker, or someone who has that breadth of lenders, like
Right.
20, 30 lenders that they work with. They know the policies, because if you are falling a little bit short in one of those, there's usually some wiggle room. But you've got to have the options to be able to figure out who is going to consider your application, and then who's going to be offering you, the most competitive deal, essentially.
Brilliant.
Yeah.
Well, thank you so much for that, Chris. And do me a favor, man. Tell us if we want to work with you, or if we want to reach out for you for more knowledge and insight. How would we do that?
Oh, super simple. So Godwin Finance, that's my own company. I have a small team that help me out processing all these applications and getting them to the right place. So you can just head straight to my website, godwinfinance.com.au. So it's GODWIN finance.com.au. Or you can call my office right here, 0290339106, anytime. And we don't charge customers directly. Basically what we do is we package everything, we help the customers, we answer your questions, we get you to the right place. And then once you get what you want, which is your home or your refinance or your investment property, the lender pays us for putting that all together. Because like I said, they don't want to have to deal with all that. They want us to give it to them on a silver platter, and then they pay us. So it's pretty cool. We get paid, you don't pay us, the lender pays us, everyone wins. It's pretty cool.
Yeah, that's a huge win. So, like, yeah. So we took a short break there. So we're going to wrap this thing up. So Chris, thank you so much for joining us on the Transform You Live show today. We got your contact information. We'll make sure you have that in the episode description. So for those who's watching live with us, thank you for joining us. Make sure you do share the episode with someone you know, someone you don't know. Those who's going to play the playback, do the same thing. And don't forget to hit up Chris and let him know that, like, hey, I heard everything you said. You got my attention. Like, give me more. Yeah,
Thanks for having me on, Marcus. Appreciate
yeah,
it. Cool.
absolutely. And most the best out there in Australia. I know it's probably morning time out there right now. Is it morning
Yep.
time?
Yeah,
Yeah,
yeah, yeah. It's
we're on the
9.
opposite side of the
Mhm.
world.
Yep. Exactly.
Yeah. Well, thank you so much. Have a good one.
You too. Thanks, Marcus. Appreciate
All
it.
right, bye.